Here we are, clan the isms, cataclysm, great. Our people out here struggling, trying to make it in this state. Everybody out here doing it, but we the ones who late. Now family, we the ones who gotta delegate. Get that money in the power, never be fake. Stick to cosign for 3. What did he say? Create jobs, support our own. Educate the same and buy back your home. Got 3 degrees, triple 10. 3 PhDs, now we on the CNN. DBTV, let's talk about negligence. Ignorance is bliss, but we can turn it to intelligence. Believe none of what you hear, half of what you see. Let's break it down here on Dr. Boyce TV. Here we are.
Hey, what's going on, guys? I'm Dr. Boyce Watkins, and in case you don't know, I'm a finance professor. I was on the faculty at Syracuse University for about 12 years, and I've also taught at the University of Kentucky, Indiana University, etc. And the reason I lay all that out there for you in advance is not to brag, but because I wanted to discuss a topic that might be a little bit controversial, and I just wanted to let you know that while I don't claim to know the truth about anything, I do have an opinion and a perspective that might lead us to the truth in terms of understanding what's going on. I want to talk about a guy that's really, really smart by the name of Warren Buffett. I remember first being introduced to Buffett and a lot of his investing philosophies, particularly with value investing, and he leans heavily on a book written, I think, in 1934 by Graham and Dodd. And I remember that book well. I remember it was this big, thick book that I remember seeing in graduate school. And I have a lot of respect for value investing because I think that there is something to be said about finding undervalued assets and utilizing specific information gathering capabilities that allow you to identify companies that could do a little bit better. And then also when you're Warren Buffett, I think you get a chance to do something a lot of investors can't do, which is to actually make your own reality. I think that Warren Buffett investing in you is going to elevate your value instantly just because he's there, particularly not just in the eyes of investors, which can affect market prices, but also just because he's good at what he does and people respond to him. He's sort of this, he's a force of nature. And almost imagine a big planet that's got, tons of gravitational pull. And when that big planet goes anywhere, or big, solar object, maybe it's a big sun, goes anywhere, it's going to suck in and impact the things around it, right? So Warren Buffett is not just a regular investor like you and I. He's a guy that I believe has that ability to create his own reality. So so when he predicts which companies are going to do well, and then he's right, it's not just because he is accurate in understanding the dynamics of that company. It's because he has the ability to impact the dynamics of that company on the inside and on the outside. He can impact operationally. He can also impact in terms of perception, which can cause outcomes that are positive. So a lot of things he touches turns to gold, and I have a lot of respect for that. Now, here's one thing that's interesting about Buffett this year. Buffett is, in this particular year, in 2020, he's not really buying anything. He's sitting on about $137 billion in cash, which is an insane amount of cash. I mean, my God. I mean, think about how many lives you could change. I'm a guy that wants to, go build schools, particularly in the black community. There's so many underfunded, high impact, high quality schools run by black people that can't get the funding. They're operating on budgets of $5,000 a month, $10,000, $20,000 a month. I would love to take some of that cash and help some of those schools. I would love to go fund some of these underfunded black businesses that aren't getting funding from big banks. So I honestly think, again, I'm a little more on the capitalist side than I am on, I'm not so much a socialist, but I appreciate some ideas in socialism in the sense that I think it's almost criminal that you've got wealthy people that can just sit on $130 billion in cash and nobody says anything. I think some of that money should be distributed. It should be invested in people who have great ideas. That's my 2 cents, but I'm going to get off that soapbox. But he's got $137 billion in cash. And when they asked Buffett, they said, so, what buying opportunities do you see? I mean, the market crashed. Prices damn near chopped in half, maybe dropped 30%. So they were like, hey, Warren, of course you're seeing undervalued assets now. My God, what are you going to buy? And you know what he said? He said nothing. He said, I don't see any good deals. That caused a lot of people to freeze up, including myself. I tend to agree with John Rogers, another billionaire out of Chicago, who happens to be a black man, who said that this is one of the 3 best buying opportunities in the history of the stock market. He pointed to the 2007 crash and 1987. And I agreed with him, and I bought like crazy because I tend to be a bull when it comes to just the growth of America economically. Myself and a lot of my students did well, made a lot of money. It was fine. As expected. It wasn't like it was a surprise, right? Because, a lot of these shocks were, temporary, long-term effects. Nobody knows what they're going to be. But I saw it as a great buying opportunity. But that's neither here nor there. Let's talk again about Buffett. So Buffett, despite all this, despite the fact that there's so many people that saw buying opportunities, is literally going in the other direction. I think that contradicts a little bit, or maybe it doesn't contradict, but it's interesting because I think about that with another statement he's made that I always thought was interesting, which was you should be fearful when others are greedy and greedy when others are fearful. So I guess the question is right now, or as the market is recovering, are people greedy or fearful? Well, maybe they were fearful in the beginning, which it seems to me that he would have become greedy, but he wasn't greedy. He was also fearful, right? But now that everyone's greedy, he's fearful, which is consistent with what he said, right? Be fearful when others are greedy. So right now everybody's greedy. They're buying even companies in bankruptcy like Hertz. I don't recommend buying companies like Hertz because buying a stock of a bankrupt company is a very risky thing. You have a chance of losing everything. So you're really buying something that's a little bit more like a deep out of the money option than you are actually buying equity in something. You're not buying something real a lot of times when you buy stock of a company that's in bankruptcy. So or going to bankruptcy and all that stuff. But anyway, I'm going to just say this. If Buffett is right, he's probably right because I know that there are fundamentals in the market right now, numbers that just don't make any sense from a historical standpoint, which could indicate that the market's overvalued. That maybe retail investors on apps like Robinhood and stuff like that have just gotten to the point where they're overbidding on stock prices. Where if you look at traditional models of discounting the present value future cash flow, that the prices just don't make sense relative to the long-term value of the companies. Okay, fine. He could be right about that. I don't agree. I think he's wrong. I think that Buffett is probably wrong because Buffett is probably using models of valuation that are not necessarily accurate for the age in which we're investing. I'm a believer that there are things that they call regime shifts, where the distribution process of stock returns and all that stuff, where the outcomes start to change over time because the fundamental dynamics that drive market valuation change. I don't really know if a person who leans heavily on a book written in 1934 can accurately tell you what stocks are going to be worth in 2020. And I remember, in grad school challenging a lot of the theories that were coming out of the University of Chicago about things like rational expectations, meaning that all investors are these rational robots who make these really logical decisions, which that's bullshit. Human beings don't think that way, right? But then they would explain it away. And the thing was, at that time, I didn't know enough math to contradict the theory, but a lot of that's been disproven. You've gotten into scenarios where people are, it took a while, but the scholars started to admit, like, oh, wait a minute, the market's run by human beings, and human beings have the ability sometimes to engage in herding effects and things like that. Professor David Hirschleifer, he was on my dissertation committee. He was one of the leaders in this area, just basically saying something that you probably know since you were little, that human beings tend to follow the crowd. Right? And this can drive maybe what they might call momentum trading, where a stock is doing well, the stock becomes hot, and it continues to become hot because other people want to own it. And everyone thinks that it's a Ponzi scheme and it's a house of cards that's just destined to crumble. Maybe that's not always the case, because if you really think about it, here's the deal. I hope I'm not getting too deep with you guys on this, but I'm going to just go there with you on this. This idea that stocks are being inappropriately valued, that Warren Buffett is leaning on, that he's thinking that prices are just too high, the companies aren't worth what people are paying for them. That whole framework is built on the idea that there are people out there that really know what the true value actually is. I don't believe that they do. The equations that value stocks are extremely precise. I've done all the math behind stock market valuation, and those equations are very, very precise in terms of the variables that go in those equations. The problem is that your information is not always precise. You're looking at future cash flows. You're estimating what this company in perpetuity is going to earn every year, and you're assuming interest rates and growth rates and discount factors and risk levels and all this other stuff. And you really don't know. I mean, you can try to guess, but nobody knows. And no one. And we definitely live in a world where no one knows what life is going to be like, in the global economy a year from now relative to today. So here's my deal. Here's my conclusion on Buffett. Again, I go back to the point that Buffett is wrong. I think there are buying opportunities in this market. I think that you can lean on traditional valuation models going as far back as books like Graham and Dodd, but still incorporate shifting dynamics in terms of just how cheap money has become, the way investors think. Psychology obviously is a big deal. In macroeconomic factors that reflect the changing world in which we live. And then just go and also connect that to the basics of knowing that a company that is well run with smart managers, like say a Facebook or an Amazon, is usually going to find a way to give you value for your investment. So I think Buffett's wrong. I think sitting on $137 billion in cash is crazy. And that's my 2 cents on the issue. So anyway, I'm going to go, guys. I'm Dr. Boyce Watkins. If you want to learn more, if you haven't bought your first share of stock yet, I invite you can learn for free. I have a free training at firstshareofstock.com. That's firstshareofstock.com. Just so you know, in the Black Business School, we are here for the Black community. We are built by the Black community. Doesn't mean you have to be Black to be here, but just know that that we're all about solving a specific problem in the Black community, which is wealth accumulation for our people. That's one of the most critical factors that we have to solve in our particular situation. So feel free to take a visit to theblackbusinessschool.com if you want to learn more. And I'm out of here, guys. Have a good day. And no disrespect to Warren Buffett. You're still my guy. I love you to death. I talk about you all the time. But remember, no man is God. Warren Buffett may be the Michael Jordan of finance, but even Michael Jordan missed a lot of shots. Even Michael Jordan made some bad choices. He retired too early. He did a lot of things wrong. So never think that because somebody has done a great job that they're perfect. Nobody's perfect, including Warren Buffett. So take care, guys. Hit the thumbs up button, hit the share button, hit the subscribe button. Also, don't forget firstshareofstock.com, and you can learn how to buy your first share of stock. So I'm out of here, guys. Have a good day. I'll see you soon. Peace.
Here we are, clan the isms, cataclysm great. Our people out here struggling, trying to make it in this state. Everybody out here doing it, but we the ones who late. Now family, we the ones who gotta delegate. Get that money in the power, never be fake. Stick to cosign for 3. What did he say? Create jobs, support our own. Educate the same and buy back your home. Got 3 degrees, triple 10. 3 PhDs, now we on the CNN. DBTV, let's talk about negligence. Ignorance is bliss, but we can turn it to intelligence. Believe none of what you hear, half of what you see. Let's break it down here on Dr. Boyce TV. Here we are.